Hello amazing forex trader, welcome to my screen. Today I'm going to be analyzing US oil, and today's aim and objective, I'm going to be explaining how to identify liquidity using break and retest. That is one. Two, I'm going to be identifying the potential on this pair, like the opportunity we're going to be seeing on this pair and how I'm going to be taking and catching it. That is two. While three is going to be, I'm going to be explaining my last video, but I didn't post it on my YouTube channel. I posted it on my Telegram channel. So if you are new in this channel, please make sure you join my Telegram channel, because my Telegram channel, I'm more active in my Telegram channel compared to YouTube. Now in my Telegram channel, I post my thought process, what I'm seeing, how I'm going to take the trade. So if you are not there, you are missing a lot. So make sure you click that. Check in the description part there. Yes, I think it's below. Check for it there. You see there, then join. You see the URL. Then make sure you click on the link and be a part of that group of the channel, or my Telegram channel. So let's go. First and first, I said I'm going to be analyzing US oil to find the potential on the US oil pair, on this pair here, for next week. Now let's go. Starting from the monthly time frame, you all know I always like repeating this. I'm a top-down analyst. I don't use top-down analysis to play. My strategy is very simple and easy. The main thing you're supposed to just know, a little brief of advice to those people or to any person watching this my video, is that strategy is just 1/10 of this game. The next thing that you're going to learn is you have to understand yourself in order to understand forex trading. That is the reason why most traders usually say that this game is scam. Then they try and they end up giving up because they don't understand the main thing towards forex trading. Forex trading is not about the technical analytical aspect. It's talking about the psychological aspect of trading. That is all to it. Because most times you can be a very good trader, but your psychology is very poor. So when your psychology is very poor, you tend not to be consistent in the game. And when you're not consistent in the game, you tend to be like, forex is calm, it's all about gambling. No, forex is not gambling. It is not gambling. It is all about you. You have to first of all understand yourself in order to trade properly and accurately. Now, forex is all about probability. Your edge your edge gives you the confidence to trade while the market ends up doing the thing. So I don't want to talk to a lot. If you have some questions to ask about forex trading and the rest, please make sure you click on that link on the URL. Join my Telegram channel. There you can chat me up and I will answer you. So let's go to this chart. Now, starting from the monthly time frame. On the monthly time frame, what can you see? I will give you 5 seconds to think about what this market is doing. All right, back to it. Now, looking at it here, you could see that the market is currently, let me just break it down for you. Starting from here, you could see that the market created this low, high, then it created this low. It wanted creating a higher high, but it ended up creating an equal high. Came back down, creating a lower low. Pull back to this point, then retest again. Then later on broke this structure, automatically becoming a higher high. You understand? Changing the structure to be high, but not automatically. I've changed structure because this is a double top. Market may likely just pull back small, then continue back down. So this is just a medium term changing correction of the direction. Do you understand? Now the market rallied up, broke this structure here, turning this into what? Turning this into bullish. The market now became bullish. Now did you see my chart? Very easy and simple. The market pulled back down to this point, that high. So the market is currently bullish at this point here. So from this point here, this point where I stopped, the market is bullish. Now the market came to this point here, rallied down, came here, came back here. The market has changed direction automatically to become bearish. So the market was moving within these two key levels, had been moving within these two key levels, ranging within these two key levels. Remember, this market is structure at this point here, so it is bearish. So came here, then bam. Are you seeing? Continue respecting the bearish structure at this point here. Are you all understand? Are you all understanding? So at this point here, the monthly time frame, we are finding the directional bias. I always like classifying my trading into 2 points. This the analytical aspect of it, then the entry and exit. That is it, just 2 points. So my monthly, weekly, and daily is for finding is for analytical aspect, while the 4 hour and 1 hour 15 minutes depending on the entry model, but most time 4 hour are for my entry and exit. I don't like I don't like complicating things a lot. If you complicate things a lot in this forex industry, the market will complicate you, and you complicate it, will be complicated out. Or if that English exists. Now see, the market created a double bottom on the monthly time frame, reversal chart pattern, broke the neckline, and rallied up. So from this point here, this is the chart pattern that caused this rally up to the upside here. Are you all understanding? So the market is currently bullish. Now the market has rallied down to this point on the monthly time frame. So on the monthly time frame, this market is what? Bullish. This market is what? Bullish. So I'm going to be taking this out so you all can be seeing it well. So can you see, this is the line chart. This is the line chart of this market, of the monthly time frame. Are you getting? The market has changed direction. This chart pattern here caused the market to morally up, now pulling back down. So the market may likely continue its up move to the upside. That's what the market may likely do. So, but we also have something here. I'm going to be taking this out. We also have something here of concern. The market supposed to, this push to this upside supposed to cause the market to rally above high before pulling back down. The law of price action, or the law of break and retest, stated that for any movement to continue or to be respected, its move, either bullish or bearish, it must at least take out the high. But look at this candle. When it started creating a higher high, it's supposed to take out this high, making it so that it can be what? Bullish. But it came here and hooked at this point here, creating an equal top. So this is a very key level of concern. Do you understand? Because at this point the market may likely roll down. It may likely roll over or below. How did they speak the English? But like this now, we have two areas of concern. The market is currently bullish, but the market is on this point here. If that the market had closed above, let me use so that I can explain to you all. Remember the monthly time frames for finding the directional bias. So I'm going to be doing this video very fast. If that the market roll over like this, they will be expecting a pullback down, then a continuation. You understand? But as this market is currently at this point creating equal top, the market may likely roll down. Am I clear? So at this point here, we don't know the directional bias, but we only know that the market is currently bullish, but this is what is holding this market from going down. When the market came to this key level, it created a series of weak rejections. Number one candle created a weak rejection. Number two candle created an indecision candle. You understand? This is a pin bar. Then the next candle that created a bearish candle, a bearish monthly candle. So, and now this candle now is also creating another bearish candle. So we may likely be expecting market to pull down to this point, maybe before coming to the direction, or maybe coming down then changing direction to the chart pattern. So like this now, we are going to be going to the weekly time frame to check if there's any chart pattern that may likely cause this thing to roll down or to continue to the upside. Let's see what the directional bias is, because the monthly time frame directional bias is not clear. Am I clear? Do you all understand? So on the weekly time frame, here we are on the weekly time frame. Now on the weekly time frame, what can we see? we could see that the chart is looking more bigger than the monthly time frame chart. That's how it is. If you are not a newbie trader, you know that that is a very normal thing. Now, looking at it here, we could see that the market has created something like there's an explanation. I'm going to explain it to you. Please make sure you buckle your seat belts. Take your paper or your toothbrush or your how did they call that? Is it called? Make sure you just get a pen and a paper. Make sure you get a pen and a paper and hold this. You hold it because this is a key stuff. And this thing, most of you can end up buying it, and yet you don't know what it means. But I'm going to be explaining it here in depth. Now, anytime you see the market creating highs, this what the high, the next one is no higher than it, the next other one is no higher than it, then just know that the market is losing it is losing interest in continuing its uptrend. It's losing interest in continuing its uptrend. So this can be signified as a double bottom, sorry, as a double top. This can be signified as a double top. Am I clear? This can be signified as a double top. But what we verify that this is a double top if this neckline is broken. Am I making sense? If this neckline is broken and we'll be expecting a retest, then a continuation. That's when we'll know that the market is completely bearish. Am I making sense? So like this now, most of you be asking me, since I'm a top-down analyst and the monthly and weekly time frame are not giving clear vibes, what am I expecting? What is the directional bias of this? This is the thing now. In your mind now, at this point, you're supposed to be having it too. You don't analyze in one direction and you analyze in both directions. You'll be expecting for two scenarios that will likely happen. That's what makes you a trader, and that's what makes you unique, and that's what makes you a guru trader, a very, 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 very advanced trader. Am I clear? Now, what are we going to be expecting? We are going to be going to the daily time frame because this looks like a double top, and this double top may likely cause this reason to reverse to the downside. Are you understanding? But remember, put it at the back of your head that this market is overall bullish, but it is suffering from breaking this higher high, this key level to continue its higher high to the. Am I making sense? Am I making sense? So at this point now, we're going to be expecting two things. We're going to be having it in our head two ways. Either the market to go up or the market to go down. But remember at the back of your head or at the back of your palm that the overall direction is bullish. But when the market came to this side, it was suffering. It was suffering. It's trying to break this high, but it couldn't. So like this, it is like it's creating on the weekly time frame, creating something like a double top, and the market may likely roll down. Is that all? And also the market can also likely pull up from this key level. Am I making sense now? So we're going to be going to the daily time frame. The daily time frame, if we see that the daily time frame is also bearish, are you getting me? If you see that the daily time frame is so bearish, then we may likely put the bearish and the bullish in our head as 50-50. Are you getting me? 50-50. But if the daily is also bullish, then we can just say also it is also 50-50. Why? Because we are trying to analyze in both ways. Anyone that click, depending on our entry model we execute, risk management will take care of the rest. So let's go to the daily time frame. Now on the daily time frame, you could see that the daily time frame market has been ranging here within these two key levels, the upper zone and the lower zone. Market has been ranging within it. We're not going to be ranging with. I can bet it a lot that many people build their accounts inside this range because this is a range. Am I making sense? Because this is a range. Now at this point now, you could see this trend line, and this market has been above the trend line, and the trend line has been below the market. Now market and this point here broke this support zone. Daily time frame broke the support zone. So what me I'll be expecting are two things. Watch at this point. We'll be expecting two things. Watch how I trade. We're expecting the market should pull to this place, to this trend line, then fire down up, fire up to the upside, or the market should come to this trend line, create my entry model, which I call circuit breaker. Don't play. Don't use circuit breaker to play. Do not use circuit breaker to play. If you see circuit breaker, execute just like Osama bin Laden. Now, I don't mind me. I'm just kidding there. So I'm expecting, if the market should break out of this trend line, I'll be expecting a roll down to this point. Am I making sense? So this is the point where I say we are going to be putting it at your head. Two ways. The market gives you your entry model, you execute. The risk management to take care of the rest. Alright, so what I'll be expecting now from this now, if I want to buy or sell, what I'll be expecting, if it is for the buy, I'm going to be drawing a trend line at this point here. So looking at it like this, if I was to sell this, you could see this is a trend line and this is another trend line. So there's a theory that I generated that stated that market move from zone to zone, and also market move from trend line to trend line, just as the way in SMC or ICT or any other this that has to do with liquidity, the market move from liquidity to liquidity. That is the same way with this, because liquidity is everything that moves the market up or down. So liquidity is found everywhere in the market. So if I was to buy this pair, I was expecting market to bounce from this support zone, pull up to this point, maybe push back down, then they break, then to this trend line, to the outer trend line. But if I was to sell this pair, because the sell has more space to the downside compared to the upside, if you check this space here, there's no any obstacle holding the sell, only this trend line here. So I'll be expecting a pull to this trend line, a reaction pull back to it, then a break down to this point here. So what I'll be interested on, when I'll be interested on this pair, is to sell this pair rather than buy it. So I'll be grading the sell. For me, I'll be grading the sell as what 80% of this, though having it in mind that the market may likely buy, but I'll be expecting a sell on this pair. Now, why am I expecting a sell on this pair? If you check recent news, you realize that Trump has called off fire from Iran and the rest and this thing. But I think that negotiation is just temporary. Trump knows what he wants to do. The war may still likely continue. Why is it that Trump called off the war, something strike in Iran? Because of Iran. So that is it. Now, as I was saying earlier, is that because I think because of the football or something, so they are going to be hosting the match in the United States there. So tourists are going to be coming to the States and the rest. So instead of the war to continue, the bombing of Iran and USA, blah blah blah, they will likely like to stop the war so that any tourist that is coming to the States to watch the ball will be safe. You understand? Then after that event, the war may likely commence. So Trump knows what he's going to do. So this may likely affect this market. You understand? Remember that the DXY. Now, I'll be going to the DXY so I'll explain something. Now, looking at the DXY here, you could realize that DXY broke out this, came back here. Then the news of last week pushed this thing up. Now we're expecting a pullback, then a continuation. Now, what did you just see? When I go to the 4-hour time frame, when I was trading this market, that was yesterday. The market, that was yesterday. The market did something like this. I was expecting a pull to the upside. What do you see? Then the market was going up. I was expecting the market to pull to this point, maybe rally. So this was spiking. Before you know, when it came to this place, it was spiking. Then later on, when the news came out about Trump talking about the war should cease of fire and the rest, the market started dumping, and that cost me to what? Blow, I think $300 off my account. I blew it. It hit my stop loss. It pained me a lot because of that news. So this is now the market is trying to show you guys that the market may likely dump, but because of the news, it may likely just pull a little bit down, then it continues spike to the upside. So but like this now, only what I can just say is that I'm going to be extraordinarily careful on the buy or the sell of this pair. But I realize that this market may likely continue. If DXY should continue its bullish trend, then US oil is going to dump. So what I'm going to be expecting on this pair now is only just one thing, and this is only the pair I'm going to be trading. If I don't see any opportunity on this pair, then I'm not going to be trading next week. So I'm going to be expecting for this to come to this place, make some minor reactions, or pull out of this place, come to this place with a pull, then a break of this neckline. Once I should see a break of this my circuit breaker, at this point here, please make sure you learn what is my circuit breaker. Once I see a break of this circuit breaker here, then I'm going to be coming for a refining of my entry, checking for any other block, a fair value gap, any place of liquidity. Then I'm going to be taking advantage of this sell at that point. I'm going to be taking the sell at that point down to this point. If the point of draw of liquidity is going to be here, then this way is going to be. Then that's how my stop loss and my TP is going to be. So this trade is going to be like a 1 to 5 risk to reward or so. You understand? So I'm going to be holding it. That's if I see my second breaker. I'm going to be refining my entry. So that is it to this trade. That is it to this pair. Now back to the other points, or the objective I said is that how do you identify liquidity in the market? Most traders trade, you see the SMC traders, they'll see this is another block, and this is a fair value gap, there. Like you hear them saying this is a fair value gap because the fair value gap has not been mitigated. So we'll be expecting a short position at this point here, for us to short this down to the downside. This is a high probable place. Now, anything that has to do with liquidity is found in anywhere in the market. Highs, low, up and down, left and right, anywhere in the market is liquidity. But which place is high valued liquidity where market may likely react from? Is places that has been touched multiple times. Like you see at this point here now. I had multiple touches. 1, 2, 3, 4, 5, 6, break retest 7. So this place is a high value point of liquidity. That is the reason why you see anytime market comes to this place, it bounces back. So this is a point of liquidity. So we're expecting market to come to this place, then drop. So that's also liquidity. If you want to find liquidity in the market, just check for place or a key level where market has tested multiple times. So that is a key. That is a high probable liquidity zone. So that is all to it for this video. Please, if you like my content, please make sure you like, subscribe, and follow. You understand? Remember to follow, to click on that link below and go to my Telegram channel so that you can be able to be interacting with me and I'll be answering any question that you have. So please have a nice day and enjoy what the market has to give. Peace out.